So, welcome. I just tried to record a video and it ended up being 30 minutes long, not 15 minutes long, and lagging. So, hopefully, second time's the charm. But welcome to this Sunday with a video about the trading setups that I use the most and how I go about very briefly how I go about trading, and I will try to keep this very short and on a general overview. Oh my god! Oh, there's lawyers reaching out to me, and my friend is calling me right now. That's why I got a bit distracted. But we will have to keep this short. Shorter than 30 minutes because I don't want to do this a second time. So I usually look at formations such as pennants and triangles and flags, which are the most common ones. But I also look at, of course, the falling wedges, rising wedges, ranges just between horizontal levels, diamond patterns, cup and handles, head and shoulders, you name it. I'm not a particular fan of the last ones I mentioned, but yeah, the flags and pennants and triangles are the most common ones. They also go with what I find to be one of the ones I use the most, which is I call it breakouts, which is just a large move, consolidation, and then you catch the next leg up or a couple legs up. Bull and bear traps and fake outs. That's also one I've used a lot, especially in times like these. Given that the market has had a rough couple of months for basically everyone, there's been a unique set of market variables. Divergences is probably also the second most common one after the breakouts, and that's I have a pattern which I call my reversal pattern, which you can. I trade it on all time frames basically, but there's a large move down. It loses momentum and steam. There's strength building up on RSI, so there's a divergence there, and then you play it. Oh my god! All right. So yeah, just really quickly, what I use when I trade. First off, I put most emphasis, of course, on price action, then volume, and after that I look for RSI and also stochastic RSI for a more volatile momentum, but that's not too significant. That's perhaps the last 5% of my analysis. I also like RSI just because it makes it easy for the sharding and not always or only the divergence. I actually also find the Stokes good on a weekly. I think they're I like them there. Let's see. Yeah, regarding time frame, that depends on I trade everything from a 5-minute candle chart to a weekly, but that depends on my current situation. If I have a lot at work, maybe scalping isn't what I have most time for. If a opportunity presents itself to me, I will take it. Of course, I'm not one to say no to money, but it is if a market is in a clear direction, I will feed off of that and make it easy on myself and look for more swings. When I screen, that's mostly swings. So if I scalp or trade other formations, that is because I've seen it on one of the tickers on any of my watch lists. So yeah, I will end the video probably on my risk management and trading in the zone. But let's be Picasso for you for a minute here. So most of you are probably aware of flags and all of those patterns, but I figured I will show you. So let's say this is price action. You have some sort of consolidation here. You can draw them any way you like, really. It's just an expression of of the market in broader terms. So after a large move up, I look for the consolidation and await a breakout. And when I await a breakout, of course I want to see a close, I want to see volume, or I want to see it come back down, test the previous resistance as support, and see that that holds before I enter, if volume hasn't already been significant beforehand. That's, you can look at this as a pennant test and as a triangle. Like my drawing is too bad to give you any clearer picture, but obviously flags can also be on the downside. So you can have price coming down here, it starts to give you some hope for the bullas, but you know this might just be a flag. It comes back down, breaks it, tests it, goes back down. Those I trade both bear and bull flags, of course. Let's see, the fake outs. So let's say you have a range here. So you have support, you have resistance. If price ranges here, comes back, goes up, and then comes back down, I go short. So here's the liquidity grab where the bull trap is. So a lot of inexperienced traders or impatient ones will get in here before a close, a significant close on a time frame that matters. They will perhaps just look past volume. So you want to see that the candle closes above. What often happens is that there's a wick above or above the resistance or below the support. So when price is up here and everyone starts to go long and get a screaming breakout, I wait for a confirmation. If that confirmation doesn't happen and price gets pushed back down again and it closes below, I go short, and vice versa. If price fakes out to the downside, you have the bear trap, I get in here. So let's draw the support out. You have a candle here, you have the wick right here. Let's say this is doesn't matter if it's a bullish or bearish candle really, but it closes above here and had been below. Those I trade a lot. I will show you the divergence or my reversal pattern in TradingView. I think that's easier. Let's see. Yeah, I can just show you quickly also. Like, I don't like head and shoulders patterns. Well, let's say the cup and handle is very easy. You have the cup, you have a little handle, you break, go. That I like, has been good actually recently, just been presented itself. So let's say you have a head and shoulders, you have your left shoulder, you have your little head, you have your right shoulder. Here's the neckline then. Excuse my drawing. So if we break here, people want to measure this with a technical target from the head or the top of the head to the neckline. You measure it down, you get your technical target. What most people don't know is that there's a failed target of head and shoulders. So let's say this turns out to be a fake out, it comes back up. Then you want to take this length right here and place it from the top of your shoulder, and you get the technical failed target. Those I find more fun and interesting because everyone is screaming head and shoulders. So I will have to speed this up now. Let's shut down Paint. Let's start with okay, so Bitcoin here, you can see that there's been a wick above here. We came back down, closed here. That's when I want to short. So everyone was probably bullish right there. Don't be. Everyone was probably bearish down here. We came back up, closed above the support, go bullish. Easy bull and bear fake outs and traps. So I want to show you Telcoin because this was a picture perfect of my breakout. Yeah. And that's also, Telcoin was one I had in my long-term bag. So usually when I have investments long-term and that I don't trade, they're on my watch list. So sometimes I find myself trading those sort of tickers also in my trading account, just because they're already on my mind and on my watch list. But Telcoin was perfect on the breakout setup. So let's scroll back quite a bit. So I actually 60x'd my money on Telcoin. But here, so when I screen on TradingView for ADR and volume. So that's because I want to, and on Nasdaq and S&P. But I want to find those that are moving a lot and then consolidating nicely for the next leg, like I mentioned earlier. And here's a very good example of Telcoin. So I caught this early just because it was on my watch list already. Here you can see the perfect consolidation. As soon as we break here, you see that volume comes in. Down here you see the volume. It closes above very, very significantly on volume. I go long. Exactly the same here. You can see that it cruises the 20-day EMA also. So when I usually catch these large moves, I try to, of course I sell portions, but the majority I try to sell firstly when we close below the 10-day EMA. This one I failed, got out, lost this 60-70% move to the upside, but got this 500% move later when we broke this resistance. That's the breakout. We will have to keep speeding things up right now. Let's look at a stock called Evolution. This is a very good example of my how I play divergences. I usually want to see the divergence build up and align with a significant support. But this time it didn't, but we had a major move down. I knew there was a buyback program. This was on a daily. Let's see. I think we'll go to the 4-hour because that's when I traded it, or how I traded it. So you can see that we have the large move down. We are losing the steam. We have clear divergence building here on RSI. And as soon as we gap up here and take out this, I see that bullish divergence as confirmed. I played it up here, sold a portion based off of this previous low and this one. And I suspect that was also the golden pocket from this area. And then at this point here, this was clearly a very significant resistance. So here I started screaming for everyone to hedge or sell. And that would have been a very good move to do in the beginning of January. Let's see if there's more to it. I tried to be my best Picasso. Let's see. Yeah, the arbitrage I can just mention. That's free money in my mind. That's a very high success rate on those sort of trades. So when I find formations on, let's say Bitcoin or when I think about it, the arbitrage trade or setup I only do on crypto. So let's say on my KuCoin account, for example, I have my watch list here on to the right. Let's take my crypto. So they're very similar to each other. So usually I see the same formations on basically all of them. But let's say that Bitcoin and Ethereum and Solana breaks out from this flag or whatever formation I see. And I see on my watch list that there's a couple lagging. So I pull them up, see that there's the same formation there. Perhaps it's Polkadot or Chainlink or whatever else. And I go against all trading rules and don't wait for confirmation and whatnot. I just basically get right in there because my assumption is that they will follow, which they always do. It's scary how successful that trade is, because it's not something I'm an advocate for, going against your rules, but that's the arbitrage trade. So basically it's a trade on the assumption that they will follow the rest of the market, and that's on a 5 to 15 minute chart. So that's not on a daily or whatever else, then it becomes insignificant. It's on a very small time frame. Keep that in mind. So yeah, we've talked about the formations, my typical breakout trade, which is the one I screen for, arbitrage, bull and bear traps, divergences. Like I use divergences all the time, but I showed you one specific pattern that has a very high success rate, which I call my reversal pattern. I've told you that I specifically look at price action and volume firsthand. Time frame, yeah, I told you I trade everything from 5 to a weekly. And so quickly on risk management then, to not get in my head when I have a very big winning streak, and also to be able to calculate my risk specifically very quickly, I usually position size my trades as 10% of my trading account. And so let's say, for example, that I have a stop loss between, I usually try to have my stop losses between 1 to 10%. Always, of course, as close to the invalidation as possible, perhaps a previous local low. But let's say I risk 5%. So if my stop gets hit, I lose 5% of that position. And if my position size is 10% of my trading account, I know that I am risking 0.5% of my trading account on that trade. So it makes it very easy to calculate, keeps my head in check when I have hubris. And yeah, so you need to think about trading, in my mind, as probabilities and statistics, and I use technical analysis to give me that edge, and risk management to keep my losers tight and my winners let them ride. So obviously when I trade on a larger time frame, I will have a worse success rate, but I will have a better risk reward on my trades. So if you only trade that, but you can have a 25 to 30% success rate on your trades, but be very profitable and consistently profitable because you have a good risk management and good risk reward. So yeah, I can finish off by giving you a tip that's free. It's a book that you can listen to on Spotify called Trading in the Zone with Mark Douglas, and I think he portrays this this thinking of sample sizes and probabilities and statistics very well. So yeah, that's a tip to end this Sunday. Hopefully this video will be on YouTube very shortly if it doesn't lag. But yeah, thank you for watching, and don't forget to subscribe. Don't forget to follow me on Twitter, and please leave comments down below. And if this was in any way helpful to you, I would appreciate a thumbs up. Hopefully I inspired someone or yeah, sparked an interest in any of my sort of setups. This was just very shortly, but maybe some of you out there found a new pattern or a new setup that you can trade. But yeah, that's it. So thank you very much.